All right, ladies and gentlemen, hello and welcome here to us, to our webinar at Nadex. My name is Philip and I will be once again your presenter for today's webinar. If you have a look at your webinar interface, you can see that small questions box, and please, right now, I would appreciate a very short yes or why in that set box to just let me know that both the audio and the screencast are working properly. And of course, if there are any questions through the course of today's webinar, please put those questions right in there and let me know what's on your mind. I'll do my very best to answer those questions as we move through the webinar. Today's session, just as usual, is scheduled to run for about half an hour. And of course, before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through them carefully and make sure that you're really comfortable with them. Guys, thank you very much for the feedback. Really appreciate it. It's always good to know that you guys are hearing me and that I'm not essentially talking with my mic shut down or something like that. So thank you very much. All right, the risk disclaimer essentially says that trading, of course, involves risk and that you should understand those risks and the risk associated with the instruments you are using before you're getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purposes only. We will be doing them in a demo account. General, a good practice to use a demo account for learning the platform, for having a look around the tools and markets. And this is just what we do here today. We have a look at the markets together and it's just for educational purpose. So please make sure you're okay with this before continuing with the webinar. And of course, here is the Nadex risk warning. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. And that being said, let's just get started. Those of you who have attended those sessions now know the agenda by heart. We will be looking at the markets together. I want to show you how I approach the markets, what I'm seeing there, and if something is setting up or if it doesn't, that's life. But the idea is we want to learn first how to read the markets and next how to potentially trade on those opportunities that we might see there or not. So that being said, let's just jump into the live markets and the platform and see what we can see there and trade. I'm looking here at my charting platform and I want to look at three different markets today. First is the Aussie against the US dollar. The next one is the US dollar against the Japanese yen. And I think the price action of the S&P 500 today, of the E-mini futures, has been especially interesting today as well. So those are the three topics that we want to cover today. So let's just get started. If we look here at the Aussie against the US dollar, what we can see here is that on the monthly chart, we had a huge down run and then a recent small uptrend. However, this uptrend is not really that strong because we can see the price has established some kind of flat level here, almost matching perfectly around the areas that we saw here. And sure enough, price has been bumping against this level. And we see some good momentum coming into the market here. But however, just recently, it's again a small leg down. On the really long-term view, guys, remember one candle here represents 1 month. So this can take some time until we test this level finally again and price is about maybe to push higher. And in the meantime, I think there's still some decent room here for, at least on the monthly chart, for a minor correction, even further down here. And so a little bit momentum here to the downside might be justified. Looking at, let's jump directly here to the daily chart. What I was seeing here on the daily chart when I prepared this session, and that's the nice thing about the market, you can prepare all you want, the market starts to move, and your preparation looks a little bit different. When I started to prepare for today's session, I wanted to show you guys, we saw a small bullish green candle setting up, and let's make it a little bit larger here. that candle, that red candle for today, was essentially a green candle, and we have just had then back in time just begun our pullback here into a moving average sell zone. And this being supported by the bigger picture coming from the monthly chart, I assume that we might be seeing a short rally here into that area, but then another push lower. And the opportunities that could have been there would have been to first try a counter trend trade on the daily chart, speculating that price pulls back, and we could have tried to profit from this pullback and then wait for another leg lower. But again, just here on the daily chart. And if we have a look at the shorter time frames, 15 minutes, 1 hour, 2 hours, 4 hours, and 8 hours, we can see that at that point in time, price had started to push higher. Our moving averages had started a very early fanning pattern here. Let's make it larger as well. Had started a very early fanning pattern. Would have been quite an aggressive trade to trade it there. And by the way, once we got this candle here, essentially that move was already over. Because if we have a look at the lows, you can see we got a low, we got a higher high, we pulled back, and this low here essentially already has been a lower low. So just looking, you might be tempted to call this here a trigger candle for our trend flow strategy and setup, but it wasn't. It was a lower low. The candle was way too large in order to justify going long here. And sure enough, after that, that complete setup started to fall apart. Price started to push lower, and we have pulled back now here into a moving average sell zone. Once again, strong move, strong fanning action, and we're sitting here just on top or below that daily pivot point, and this on its own might already be considerable. Let's put it that way. It's not a perfect setup, but we're here for educational purposes, and for that reason, let's just give it a try and see how this could potentially be traded to the long side or to the short side. Might take, if I had to trade it right now, would be the short side, but in the end, it's your call, it's your money, and yeah. Now that we have identified potentially a tradable setup, the question is, how do we trade it? And for that, I'm switching now over to my Nadex platform, and I will be using my demo account for that. And guys, just in case you haven't registered for a demo account yet, I highly recommend doing so. It gives you those tools that you will then need later on to trade live in the market, and you can do so in a risk-free environment. How can you register for the demo account? It's straightforward. You just go into the trading platform, you click on demo trading platform, and I can push you also that link to register for the demo account right now here in the chat box. You should be able to see it now. You just sign up here, click on that demo, open the demo account, and you're good to go. And by the way, if you have already registered for an account, but you might have forgotten your credentials, straightforward, you just go to login and you see your username and password. And if you don't know any longer the password you signed up with, or maybe the email, you just click on forgot your login details and you're good to go. No need to call somebody. Of course, Nadex support is always there to help you, but this is you have that email with the login details and how to reset your password about 5 seconds later. So that's the fastest way to go to reactivate your demo account, just in case you haven't done so. All right, if you log into your demo account, you will be seeing something like that. And what we're seeing here is now the different prices and markets available for trading. And here right now, I'm not looking at the indices. This is something that we want to do later on. But right now, I want to trade forex binaries, and those forex binaries, we have been looking at Aussie against the US dollar, and we want to be trading this on a 5-minute chart. So no need actually to go so far out in time to be looking at a weekly chart or daily 11 p.m. Why not have a look at this expiry cycle here? And you can see that market or those options have an expiry time to expiry of about 2 hours and 50 minutes left. So in 2 hours and 50 minutes, it's judgment time, and we will have to decide, or the market decides, if price settles above the strike price that you can see here. And if it does so, that option will settle at $100. If the market trades below that strike price, that option will settle for 0. Straightforward, easy as that. binaries really are straightforward, and if you practice a little bit in your demo account, I think it's quite easy and straightforward to really get involved there. Now, if we think price might be going lower, you see only few of those are actually being quoted right now. 74.80, this would be a price level of about here. Might be a little bit aggressive, but could still be doable. And the other one, which I would consider for my trading, would now be 75, which is pretty much where price is trading right now. And we know that price is trading in that area right now because the price of those options is very close to 50. Those of you who have attended those webinars or are attending regularly know that you can think of the price of a binary, something like the conventional delta of a plain vanilla option. And if a plain vanilla option is trading at the money, that option will have a delta of approximately 50. And that's the same thing here with the binaries. The price is always between 0 and 100. Until expiry, there it's either 0 or 100, therefore the term binary. But in between, it reacts a lot like delta. It's probably not precisely the same term and formula from a mathematical point of view, but for me as a practical trader, that comparison is good enough to be actually trading the markets like that. So first trade that I could do is I could try to sell this contract here. I think the market might be going lower. That's just my take. It's not a recommendation. Keep that in mind. We're just practicing here together. If I sold that contract now for 45 bucks, my maximum loss would be 54.75. My maximum profit, what I'm getting for this contract right now, 45.25. This trade has a decent probability, at least from a mathematical statistical point of view, of being a winning trade, because it's pretty much where price is trading right now. It can go lower, but it can also rise. It's about a 50-50 chance, and this is what the ratio here also reflects. What I don't like about that trade is I'm risking now 54 bucks in order to make just 45. Personally, on my trades, I would like to see a reward to risk ratio larger than 1. It doesn't make any sense for me to risk 100 bucks in order to be able to maybe just make 30 bucks. I want to have a decent reward to risk ratio on my trades. If you have a trading strategy and apply that trading strategy flawlessly in the markets, you should have an edge. And that edge should consist of winning more often than you lose. First big plus. And the second big plus is the winning trades should be bigger than the losing trades. And the winning trades, those are bigger. This is what you take care of here with the reward to risk ratio. So that might be a trade in that direction. And let's just hit it here and place the order. And you see I already am in my position. The trade is already live and running. This would have been one option for a strike price. It's trading at the money. Decent probability of success, at least from a statistical point of view. But the reward to risk ratio wasn't that great. We could be way more aggressive to speculate to the downside here and go to the contract which I just talked about a little bit earlier, 74.80. So price would have to drop to this level here within the next 2 hours and 46 minutes. And not only to drop there, the market would have to close, or when this option expires, price has to settle below the strike price. It doesn't make any sense for me if price just drops there once briefly and then runs all the way back. Doesn't help me in the end. If I want to hold that contract, until expiry, the market must close and settle there. However, those contracts that I can trade here at Nadex, they are completely normal tradable contracts and positions. And this means I could rather easily scale out of those positions, and I don't have to wait until until expiry. I can just close that position early on, just like you could close a futures position, a stocks position, a normal option position, pretty much the same thing. So always keep it in mind, you don't have to wait until expiry. It's not fire and forget. You can do it like that, but if you want to actively manage your position, you have all the possibilities to do so. Now, let's assume I want to sell this contract here, and if I sold it here now, I'm risking now just $5.50. Why? I'm getting 94.50 for that contract. If it settles above the strike price here, which is currently rather likely as we're trading way up here, then I will have to settle this contract, for which I got 94.50 at 100, and this explains my maximum loss of 5.50, $5 right now. So the reward to risk ratio on that trade here is outstanding. Risking 5 to make 95. That's perfect. However, you have to see that this comes with a stinking probability of success. Price would have to drop all this way and close below this price level here for that option to be worth something. I hope you can see that this is not as likely as price to just drop below this 75 level, which we have just traded before. Let's just put it in there, and let's do maybe 10 contracts, and you can see if I traded 10 contracts, my risk would be $50, maximum profit 950. But again, I know this is very tempting and appealing, but keep in mind the risk reward ratio absolutely stinks on this one. So I'm placing that order right now, and you can see my position 5 have already been filled and 5 are still working. And while this order here still is working, why not try to actually put in a limit order to scale out of my position if price actually starts to drop and move into my direction? Of course, it doesn't do that right now, but that's what we're here for. It's just demonstrational purposes. So if we just think price might be going lower, and the price of this option might be coming down, if I think that it will trade at this level here, it would be trading at the money. And if it was trading at the money, the price should be very close to 50. So why not close those 5 trades here for a potential price of, let's say, 55. A little bit more than just 50 to give it a little bit of wiggle room to move in my way. And just put it in there. Might be working, doesn't have to. Nobody knows what's going to happen. This is why proper risk management is so crucial and important, to make sure that those trades are comparable. So we just put that order in there. And you see it's a working order. Those previous other 5, the second leg has been filled as well. And this order here is just sitting there. It's if price actually starts to rush lower, I start to scale out of my position. And if price is pushing higher again, yeah, that order won't be filled. The nice thing about all those positions that we did here, we knew our exact risk up front. There's no nasty surprise. You're waking up and your account suddenly is way down. You know exactly how much you can lose and risk on those trades the very moment that you actually submit the order. That's a very, very powerful feature. All right, if you think, no, that market is going higher, and just for the sake of neutrality, if you think the market is going way higher, you might actually think, and let's pick a different cycle here. Let's go to the 11 p.m. You can see those have 10 hours, 41 minutes left until expiry. And you could, for example, think, no, I think market is pushing higher. You might be wanting, you could be looking potentially into trading one of those options here. And what is your maximum loss? 127.50. If you now bought 5 contracts, your maximum profit 372. What's the probability that this trade could be a winning trade from a mathematical point of view? You take just the mid price and interpret that somewhat as a probability. Rule of thumb, not really precise, but it's a very good ballpark estimation. So keep that in mind, 15 to 25. So probably the market thinks we have about a 20% probability that we might actually get there for our for when the contract expires. So let's place that order there just for the sake of completeness, and that's it. All right, this is Aussie against the US dollar, the big picture and what the market is doing right now. And now let's quickly jump over to US dollar against the Japanese yen. The Japanese yen is currently a rather strong currency, especially if you look at the other markets as well, the other crosses with the Japanese yen. And sure enough, it started to push lower. Very nice. If we look here at the market, you can see nice uptrend on the monthly chart. However, strong move to the downside, way beyond our moving average buy zone here, established clearly a lower high, and yeah, definitely momentum here to the downside again. So big picture here is clearly pointing lower, and the idea that I had there was that we could use our flat horizontal line and just put it in there. And if we zoomed out a little bit, you can see the price actually reacted to this level at least a tiny little bit here before. And yeah, the idea is if we get a breakout here to the downside, that this might be a strong breakout and that we could be trading potentially this market here to the short side. Again, that's the picture on the daily chart. Let's have a look here at those lower time frames, and sure enough, 15 minutes pushing lower, 60 minutes pushing lower. Here on the 15-minute chart, now we're starting to just see a pullback in place on the 60 also, and I would like to see this pullback to just go a little bit further to give us an idea that we are back again here after this strong extended move, little move back here into a moving average sell zone. What could be a potential target and area for this pullback? Let's just try to put in here those pip retracements and see if we can find some kind of cluster that suggests that some level might be stronger than others. And guys, I haven't practiced this yet. A typical area that I would be looking for is, I want to see, at least after such a strong move, I want to see a 50 to 61.8% retracement. And this happens to be very close here also to our 38.2% retracement. It's not a perfect cluster. I don't have any pivot points, so this on its own won't trigger a trading decision for me. However, if I get some kind of pullback sitting here to this around this 110 level, big round number, then this would be potentially really be interesting. So how could this be traded? Once again, we're switching back here to our end. Sorry, let's keep that a large chart so that we can see what price is doing while we're practicing here on our demo account. Now, forex binaries, why not have a look? And I haven't checked that before. Let's have a look at the spreads. We're looking at the US dollar against the Japanese yen, and let's look at the daily spread here. Now, if price is trading at 109.1680, I'm just now looking for a spread. I'm looking for the floor level and the ceiling level. And if I think the price is currently pushing higher, and let's have a look at this at the spreads when we're talking about the US indices. Let me just here go back to my forex binaries, US dollar, Japanese yen on the daily, or we might be looking at the weekly here, because remember, the big picture was once this level is broken, seemed to be a pretty strong level, and there might be some more momentum to the downside. So if you think that there might be more action, time left, 2 days in those contracts. And guys, remember, it's Easter week, which means, of course, we have Good Friday, banking holiday. The markets are closed, or most markets are closed. So keep that in mind when you're trading around your positions. Markets are closed, Good Friday. So currently, the idea is we might see a pullback towards this 110 level. So we could be looking here, for example, into buying that contract. Price might be pushing higher to hit this level. And the idea might be to say, okay, I'm trading 4 contracts right now. I'm risking 236 for a maximum profit of 164. And I hope you can see why I personally don't like that trade. Yes, you have a probability that this trade will be a winning trade, larger than 50-50. But essentially, I'm risking 236 to maybe make 164. I don't like that. So what I personally would consider to do, I could be looking here at that contract, and the price is below 50, which tells me it's trading out of the money. Price has to push quite a bit in order just to get there. But we could be buying this contract now for just 30. We could be risking just 133 for a maximum profit of 267. That's a 2-to-1 risk to reward ratio, and I really like what price is, both the probability and the offset. And I'm just placing that order here, and just the same thing. I'm clicking here, And if I think the price actually will start to go towards my strike price, and I just entered here at 33 something, why not try to scale out of that position and sell 2 contracts if price is, for example, approaching a price level of, why not 45? So I'm just scaling out of that position. I'm placing this order. Is price there yet? No, it isn't. What does it mean? It's sitting there as a limit order waiting to be filled. Do I know if it's going to be filled? No, nobody knows for sure. But if price is trading there, that order, of course, is being executed. All right, now the big picture, and let's have a look here at the big picture. Something which is now trading pretty much at the money of 109.80. So we could be looking here at this contract, and sure enough, it's trading very close here to 50. If I think price can go lower and should go lower, and whatever, if I want to be a very bearish in this setup, I could be looking into selling that contract here. It's trading way above 50, which tells me it's deep in the money. The probability that this trade will work out rather low, because price has to drop quite a bit, at least from a mathematical point of view. But if my analysis shows me that I think it's rather likely the price will start to drop, nothing wrong with taking that trade. Now, maximum loss, as it's deep in the money, is just 52 bucks for 4 contracts. My maximum profit would be 348. I'm just placing this order now. And the next idea is that I think, okay, if that order is being filled, I could start already to scale out of that order, once again entering my limit order. This order is currently being worked in the market. It's not been filled yet, so I won't raise that order yet. But I think you got the big picture and got the idea about what I was going there for with. Time already flies, so I rather really speed it up and briefly touch upon the S&P 500. Big picture, weekly chart. Last week, we already had a look at that market, saw that the market was pushing higher, pulling back, and we have identified this potential cluster here of something around 2,308, 2,310, something like that, FIB cluster. I wouldn't be surprised if that price level got hit on the way lower to find maybe support and price trying to push higher. So I see some tendency here for price, or some more potential for price to drop lower on the weekly chart. Looking at the daily chart, you can see those lower highs, but now it's not really clear. This is rather an extended sideways move that we got here. It would be nitpicking trying to identify really precisely here if this qualifies as a low compared to that one, or is this a new high compared to that. The overall picture just is not clear. I see some momentum here to the downside. And by the way, I don't trade from sloping trend lines. However, in this example here, I think it's rather interesting to see that starting from this low here, we perfectly have hit this level. It's very tough to trade from those lines, because this line every time has a different value. For each bar, it's somewhere else. Is this now a break or isn't it? What I want to do is I want to see that price actually has broken some flat levels of support and resistance. And sure enough, I do have one. And this level is absolutely clear. It's sitting here at 2,334.75. You see, it's not that clear either, but it's way more clearer than that line here. No idea where this line is here. And from our trading, from our backtests, if those lines get broken, they generate way more reliable signals than the sloping ones. In the end, you pick what works best for you. Keep that in mind. We don't use it. However, this wasn't really just a very, very shiny example, so I wanted to show it to you guys. Idea is, if we finally break below this level here, and that level has been tested and established a few times here, and now once again being confirmed here today, if we break below this level, there might be some momentum, some more momentum to the downside. Looking here also, we can see that both MACD and RSI significantly have lost momentum during that sideways phase. So this would also try to push those markets more in towards that direction. If I was to trade those markets now and do this on a little bit longer time frame, I might be inclined to have a look at my indices and indices spreads. And of course, I want to see that breakout happening here first. What's the general idea if you want to trade spreads? Well, and let me just move over here to the shorter time frames to, if you think this is a pullback and we might be waiting here for potential reversal, coming back to test this level once again, what would be a process to select now one of those spreads? I'm looking at the ceiling level. Potentially I want to go short, so I want to enter as close to the ceiling as possible. And those contracts here, they all have a ceiling level of 2,390. 2,390. This is way up here, way too far away. 350, 370. So this one would be the one which I would consider earliest or easiest to trade. Why? I want to enter on a potential short trade as close to the ceiling as possible, because then price has a lot of room, pretty much all room left to go in my way to drop towards the floor. However, if I enter towards the floor, it can't go lower than the floor. It's sitting there. So for potential short trade of those contracts here, this would be my most perfect candidate. It's not a perfect one. It's still, I would prefer if we were closer there. But yeah, we are quite there. And you can see that we are quite there because our maximum loss is just 64 bucks. While the maximum profit would be 336. Keep in mind that this contract moves in the direction of between floor and ceiling. So just because it has really, for this maximum profit to be potentially realized in your account, price has to trade at or below the ceiling level of 2,310. Do I think this to be likely within the next 3 hours and 42 minutes? No. For that reason, if the market starts to drop, yes, you will probably making a potential profit. However, if it won't be as much as we can see here. Keep that in mind. All right, guys, we are already over time. So thank you very much for tuning in. Let me briefly jump back here to our slides. And just as always, if you happen to have questions, just let me know. I'll do my best to answer those at the end. After the official part. The official part is ending right now. You have seen how we have analyzed the markets. You have seen how we have used our demo account to trade those markets and explore profit probabilities and reward to risk ratios. And you've seen how easy it is to either reactivate your demo account or sign up for a demo account if you haven't done so already. Furthermore, if there are any questions that Nadex can help you with, there are lots of different ways to be in touch with the good guys at Nadex. So yeah, we would really love to get feedback from you and hear and see you actively using the platform and be practicing there.